Hey guys, Kevin Bupp here, and I want to welcome you to another episode of the Real Estate Investing for Cash Flow podcast. Our mission is to help you build and maintain massive amounts of cash flow through income producing real estate investments. Now, today's guest is someone who's been helping real estate investors unlock one of the most powerful but often misunderstood tools in building long term wealth, and that's a self directed IRA. Now, guys, today I'm joined by Kaaren Hall, founder and CEO of uDirect IRA Services. Um, she's been in the real estate and financial services space for over 2 decades. She's been able to help thousands of investors take control of their retirement accounts by investing outside the stock market into alternative investments such as real estate, private placements, notes, and much more. So we'll go through that today. But and I think in today's episode, I had Kaaren on many years back. It's been many years, so looking forward to getting updates from her. But I think in today's episode, we're gonna we'll go through some of the basics for those that are just brand new to real estate, don't know what a self-directed IRA is. So we'll cover some of the basics of self-directed IRAs, maybe discuss some of the the opportunities and maybe some limitations associated with with this vehicle, and maybe even cover some of the biggest myths that are out there. Right, just really give you guys a full spectrum and general understanding of self-directed IRAs and the power behind this vehicle. And so, without further ado, I'd like to welcome Kaaren Hall to the show. How you
Oh,
doing
Kevin,
today?
nice to be back.
Yeah.
Yeah, thank you.
Excited to
Thanks.
have you here again. It's been a number of years, so excited to get caught up with you and just talk shop. So how about let's just back it up a little bit. I gave you the brief introduction. I know there's a little bit more probably to your story. Fill in the blanks for us if you would. Take a few minutes. And again, just for those that aren't familiar with you, that don't know who you are and what it is you do, tell us a bit more about yourself.
Yeah, I mean, the way I started off in life, in college was as a radio announcer,
Okay.
you know, and I was on radio stations in Phoenix and Seattle and Dallas and so forth. So I did that for a number of years and made the logical transition into real estate, um, because all of us, we know that there's a better path to wealth than a 9 to 5 job. And I agreed with that. And I became a real estate agent and then got involved in all different sorts of elements of real estate, like property management and then loan servicing, origination. What else did I do? I mean, just so many different things. I'm a real estate investor, and just learned so much through these other real estate related professions. It was just the perfect fit, for self-directed IRAs, because it's exactly what our account holders invest in is, real estate. So all the jargon, all the rules, how you do it, that I had down. Now I could help people do that in a retirement account.
Got it. Got it. No, I appreciate the background. So maybe let's start with some of the basics, Kaaren. I guess maybe kicking it off here. I guess what is a self-directed IRA, and I guess more specifically, how does it differ from the traditional IRA or a Roth IRA, which a lot of folks are probably familiar with. But what are the big differences here?
Well, right. Well, your question highlights how many misunderstandings there really are about what a self-directed IRA is. So I'll just like kind of from ground zero. It's 50 years ago this year that the IRA was created by the ERISA Act, the
Mm.
Employment Retirement Income Security Act, okay, 1975. And that created IRAs, and they've always been self-directable. So an IRA is an IRA. The rules are the same whether it's self-directed or invested in market correlated assets. It's the same thing. It's the
Mhm.
same entity. It's not viewed differently by the IRS. But what does differ is the asset class that retirement savings bucket can hold.
Okay.
So instead of market correlated assets, now, like you mentioned, real estate syndications, but cryptocurrency, precious metals, notes, performing and non-performing debt, just a lot of whatever is an alternative asset, REITs can all be held in a self-directed IRA. So that is the difference.
Okay. Are there any assets that can't be held in the self-directed IRA? I mean, what are
Yeah.
some of the limitations?
Yeah, when the IRS created these, it's two things: life insurance contracts and collectibles.
Okay.
That's it. So no car collection in your IRA, no fine wine collection in your IRA, or something like this. But those are the only two things:
Uh,
life insurance and collectibles.
okay. So artwork would fall in collectibles, correct?
Correct.
Okay,
Correct.
got it, got it. How about the steps of setting something up? I mean, what help
Oh,
walk through
yeah.
the basic process. Someone listens to the show, want to learn a little bit more, have a general
Yeah.
understanding, and would like to get something set up. What are the necessary steps to do so?
Well, Kevin, people who listen to your show already understand real estate, I would think, because you provide a great
Mhm.
education for people. So that's the first step is to educate yourself. Know what kind of asset that you want to invest in. Research it, do your due diligence. That's the first step. But as far as the self-directed IRA is concerned, super easy, open, fund, invest. When I very first started working in the industry in 2007, it's like, how can I explain this easily to people, And I thought, well, how would I understand it? What are the steps? And I came up with that: open, fund, invest. So on our website, we've got a digital application. Boom, you can get an IRA opened and, or solo 401k, whatever you like, in about 15 minutes. Funding it, that is contributing, you know,
Hmm.
doing an IRA to IRA transfer or rolling over a previous employer plan. So you open it, put the money in it, and then while we're waiting for the money to show up, give us the investment docs. We review them. The IRA is the investor and not you personally. So we want to see that on the docs. And then we fund the deal. Now you've self-directed, and all the proceeds that are due to the IRA for that asset come back to the account that owns the asset.
Okay.
Some people think, oh, it's retirement money, so I'll just take these proceeds and put them in this other retirement account. No, you don't do that. It goes back in the account that owns the asset.
Got it. How about getting financing if you're going to buy a piece of real? We'll keep it to real estate here today for the purpose
Yeah.
of the show. But you want to put some leverage in place. The IRA is going to obviously be the buyer of the asset. But how does leverage work in the case of using an IRA to purchase an investment?
I love that question because that is also one of the most misunderstood things about the self-directed IRA is leverage and how to use it, where to find it, and are there tax consequences? So I'll cover that. So yes, an IRA can borrow money. It has to be what's called a non-recourse loan. And that means it is not a Fannie Freddie, FHA, VA kind of loan. You don't go to your regular mortgage officer or loan officer, to do this kind of loan. And by the way, at uDirect, we do offer, if you just want to hit us up at info@udirectira.com, we'll send you a list of non-recourse lenders. Okay. So it's kind of
Hmm.
hard to find them. So we put together a list. So there you go. But your IRA borrows the money. So say, for example, there's a property and the IRA borrows, say, 30%, 70% comes from the IRA. So here comes the rent check. So then 30% of that rent would have been earned due to leverage. Okay. And so it's that 30% that is subject to a special tax, not income tax, because yeah, these IRAs are tax free or tax deferred. That's true, but income tax
Hmm.
free or income tax deferred. So it would be a special tax called UDFI, unrelated debt financed income tax. Now, if you want the rule book on that, the chapter and verse, it's irs.gov, publication 598. So you can read all about it. All right, so that's
Got
where you're going to find it. So then your IRA is opened, and maybe if it's subject to that UDFI tax and there's leverage, then you and your tax person get together and you file a 990T. It's a tax form. And if any taxes are due, they're paid by the IRA, but maybe you've got deductions, so your tax person can, factor in the deductions. You might not even owe any tax, but this is a process to go through annually. So a year and a day after the asset is paid in full, this is something you're going to want to look at and discuss it with your tax advisor.
Got it. Got it. So I would say that falls in the camp of those that just they want to be in control of their investments. They want to they want to find the real estate they want to buy. You're a traditional real estate investor, but then you've got the other camp. I think that especially since the Jobs Act passed in 2012, lots of real estate syndications are out there. Lots of alternative investments available to your typical retail investors now. So let's talk about using a self-directed IRA to invest in a syndication.
Yeah.
Any differences there as it relates to what we just discussed in a traditional held type of real estate? Now we're buying a security, right?
Right, right, exactly. So, I mean, really no differences in the process because it's, open fund invest, you give us the docs and we review. So there's that, but the documents are what is different, obviously with the syndication, and the due diligence is different. So
Mhm.
with the syndication, you want to do your due diligence in so many ways. You want to talk to, obviously, the GP or whoever is the capital raiser here, talk to them and get to know them, talk to people who've invested with them in the past, what's their track record, and then check them out with FINRA's broker check, which is brokercheck.com. Throw their name in there and check, hey, have they ever been like incarcerated? That would be good to know,
That's good. Yeah, always good
Yeah.
to know.
We've had that happen where people invested without checking, and to find out that the person they just invested with actually just got out of, 2 years of incarceration
Oh
due to
boy.
their criminal activity. raising capital. So
Oh my
just, it's so
gosh.
easy. We've got, the oracle of all knowledge in the internet. So just use it and it's pretty easy.
Yeah, I'd say there's really not any excuse for that anymore. You just do a simple Google search on somebody and find
Yeah.
probably the majority of what you need to find, right?
Yeah. With
If
the
there's
word
anything,
fraud.
if there's anything
Yeah.
bad out there, right? That's hanging
Yeah.
over their head. Um,
Yeah.
so you mentioned the nuance associated with getting leverage, getting debt. How does that, and it has to be non-recourse.
Mhm.
Um, How does that play out in a syndication? So you've got the general partners,
Yeah.
let's say they're going to put debt on a property, whether it's recourse or non-recourse. I guess let's assume it's recourse. Does that pass down to the limited partners that are, leveraging their self-directed IRA to invest in that security?
It really does. And I want to throw out
Okay.
here too another fact that syndications are the number one asset class for our whole industry. And yes, if there is leverage in that capital stack, that is going to throw off this UDFI tax. Now, how do you know? Well, talk to the asset sponsor, is there
Yeah.
leverage? And they're going to report it on the K1 that they send you. So again, share that with your tax advisor, share that with us. And then so that we, know the situation, but then you'd file that 990T. But of course, now, if they do say a cost seg on, say, maybe a multifamily building, whatever the underlying asset is, that can oftentimes throw deductions onto your 990T for you. So
Got it.
it's a good tax conversation to have.
Okay. Okay. I know there's some limitations as well with real estate of what you can and cannot do. I mean, as it relates to like, the management, repairs
Yeah.
and maintenance, things of that, for those that are like the DIYers, right? They want to do it themselves. Let's talk about some of those limitations of what you can and cannot do to your investment property.
Yeah, I think surprisingly, there are things you can do. I mean, where the IRS as a prohibited transaction is offering services to the plan, like swinging the hammers and all that. But what you can do is this: you can choose the renters. You can select them. You can, pick up and collect the rent check from the renters and send it in to your IRA. And you can hire third-party vendors to do the work. So you can do all these things, and so in a way, you can be the property manager without it being prohibited.
Okay.
Um, but what you don't do is, gosh, never take a fee for it. Never think, oh, I'm doing all this work, I deserve a fee. There's actually, legal precedent that says do not do that. So make sure that you're not taking a fee to manage your IRA on properties.
You can't take a fee yourself, but if you hired a third party management company, you could pay them their fee, correct?
Absolutely, a third party
Okay.
could receive a fee. Yeah,
Okay.
yeah.
Okay. Got it. How about, I know this is a big one, but it's worth talking about here. Someone says, "Hey, yeah, I've got all this money in my self-directed IRA. Airbnb seems like a great investment. Short-term vacation rentals, and we might be able to use it ourselves as well. And maybe the 3 or 4 weeks that it's sitting there vacant, is that an issue?"
Yeah, it's an issue. It's a prohibited transaction, And
Yeah.
again, chapter and verse on that one, it's the Internal Revenue Code, IRC 4975 is where you can just look this up. But no personal use of IRA owned assets is yeah, prohibited, like what is that? It doesn't sound like it's just, like, hey, prohibited, slap on the wrist. No, if the IRS says you committed a prohibited transaction, this like tax protected bubble of your IRA bursts and it's not tax protected anymore. Now your account is subject to fines and taxes back to the date of the infraction, and it can get messy. And so it ceases to be an IRA when the IRS tags you and said you committed a prohibited transaction. Now there's some remedy perhaps, and that's to request a private letter ruling. The IRS is going to charge you, I don't know, like five figures to file for a private letter ruling, and you're going to pay an attorney. So if you're going to look at a really big tax hit, it might be worth it. But a private letter ruling is a way to argue and say this shouldn't be prohibited. So that is maybe a get out of jail, not free kind of situation.
Got it. Got it. And then, any other operational expenses, property taxes, insurance, it's paid directly out of the IRA account, correct?
Yeah, it has to be. But on
Yeah.
the other hand, proceeds have to be made payable to the IRA. Now, asset sponsors, GPs, we're all humans. And so what'll sometimes happen is the proceeds get made payable to the person and not the account. And so the person will get the check made payable to them. They go, oh, great, I'm going to go shopping or something, whatever. I'm going to, yay, I've got money. And they put it in their own account. That is,
Yeah.
I mean, at best, it is like a withdrawal from your account. I don't know. You just have to look at it, but you just don't do that. If you have invested with a self-directed IRA, the check comes back made payable to you. Always, always send it back to the asset sponsor. Say, hey, oh, you made him a little mistake. the payee is wrong. Can you just please fix it for me? And they'll do it. And then it can be deposited in your IRA account. Never deposit it in your personal account. That could cause problems.
Got it. Got it. Can, assuming maybe someone has multiple, retirement accounts, can you pull multiple self-directed IRAs to buy an asset or invest in a piece of property?
Yeah, you can. What you may not want to do that because if you pull multiple IRAs, now if they're all yours, you definitely probably want to consolidate the funds into one account. Otherwise, it's going to be titled, but you're going to have like a lot of investors in the same deal when it's really just you, and
Yeah.
through your IRA, I would consolidate your accounts. But if say it's you and three of your investor friends, and so the four of you get together, you can all, pool your IRAs together and invest that way. And so each person, but when you do that, it gets a little tricky. You just need to know that it starts from day one. So whatever your pro rata ownership is, day one, that's how much earnest money goes in, your pro rata share, closing costs,
Hmm.
any repairs, anything. And same thing with proceeds. They're split pro rata as well. So just know that, like here
Got it.
comes the a property tax bill. And I'll tell you what, property tax authorities, they do not like a whole bunch of bills for the same parcel. So you pretty much need to put all those checks in one envelope and send them in together, you know? Um, but any bills that come due, each investor would pay their pro rata share.
Got it. No, understood. How about, it just, biggest myths, or I mean, maybe more specifically, misunderstandings that folks have. I mean, we're covering kind of all over the place here, covering some different bases, but I mean, just what are the biggest common questions that you get from folks that are looking to open up a self-directed IRA and just get a firm grasp on how to really leverage this vehicle to, to set them up for, a more, I guess, financially sound retirement.
I mean, some of the biggest misunderstandings we've kind of covered with leverage. That is, I mean, we've had somebody get all the way to the closing table trying to get a regular conforming loan for a self-directed IRA. And
Gotcha.
I felt bad for that loan officer wasn't who thought they were getting a commission and they weren't, when they found out, oh, can't use this loan. So
Yeah.
that is a misunderstanding. And also about receiving checks, like I mentioned. So, but I think there is something that is a new rule, a newish rule that a lot of people don't know about. And that is that effective officially December 31st, 2022, you can make a Roth contribution to a separate simple IRA. Like Secure Act 2.0 created that. And so with say a SEP IRA, the contribution is a lesser of 25% of your income up to a cap of 70K. So say you make enough to contribute 70,000. You can choose to put that in pre-tax
Hmm.
as a Roth contribution to your SEP. There you go. People are always looking for ways to have more tax-free money. And that, of course, that leads to like the backdoor Roth. You've heard of this.
Hmm.
But this is another way to have more Roth money is to be self-employed, have a simplified employee pension called a SEP, and make Roth contributions. Now you can make the pre-tax contributions too, and perhaps, and likely get a tax break for doing that now. Or you can put the money in Roth and have it be tax-free for life as long as you meet the conditions. So
Do you have any,
that's
you have any,
something a lot of people don't know.
any resources or white papers on your website that are available that can give folks
Yes.
more information about that?
Yeah, we have a really robust blog, and pretty much anything you want to know is there. I sit on the board for the Retirement Industry Trust Association. So when something new is coming down the pike, everyone who is part of RITA knows about these things. So I'll always make blog articles about, hey, this is something that Washington is talking about, or this is something that is really a rule. And we have just hundreds of blog articles on all different self-directed topics.
Got it. Are there any maintenance? I mean, like, for uDirect, I mean, what's the maintenance cost look like on an annual basis to manage these various accounts?
It's very low compared to others. It's a $50 setup fee, which is a one-time setup fee. And then the annual ongoing fee is a $275, like flat fee, regardless of the number of assets and regardless of their value. So say like you have self-directed IRA, it has real estate and a note. So it's just 275. It's not 275 plus an extra 100 because real estate extra 100 for a note. And so you're paying all these fees. It's not like that. It's just one flat fee. And people, our account holders love it. And it makes it really good for high dollar accounts. Some companies will charge based on like the value, the sliding scale, the value of
Mhm.
your account. We don't, just a flat fee. So that, people really like that.
Okay. Any other fees to speak of? I mean, whenever an investment's made, or I guess just help us better understand, if there's anything else aside from just the annual fee.
Well, the first 6 transactions are free for the lifetime of
Okay.
the account, not yearly, but for the lifetime. Otherwise, if you're investing after that, it's $35, to process a request. We call it a DOI, direction of investment.
Hmm.
And if you want something, FedEx, there's a fee. If your IRA owns a house and there's a renter and they bounce a check and we get, dinged for that bounce check fee, we're going to pass that on to you.
Gotcha.
It's like $25, something like that. So our fees are very reasonable.
Okay. For those that want to learn more, Kaaren, I mean, website, best
Yeah.
place to find you. Are you active on social?
Very active. We're on all, hit us up on YouTube, Instagram, so forth. If you want to learn more, oh, wait a minute, look what I have. A copy of the book I just published
I
with
love
Bigger
it.
Pockets. Yeah, it's the Bigger Pockets Guide to Self-Directed IRA. So it's not a storybook, it's a guidebook, and it's easy to follow. So you can go to biggerpockets.com/SDIRA and grab one of those. But the best place to reach us is like to hit us up and email us at info@udirectira.com.
Okay, fantastic. Well, Kaaren, it's been great having you here. Anything else that we might have skimmed over, skipped that you feel is critically important for those that are tuning in to know about self-directed IRAs?
I think so. I think there is that self-directed IRAs are a piece of the puzzle in your
Yeah,
retirement, and it's a great piece of the puzzle that gives you so much leeway and freedom to invest in what you know best. You definitely need to save for retirement. Almost nobody is fully prepared with enough dollars to retire. So just do yourself a favor. Like a takeaway would be go make a contribution to an IRA or
yeah.
to your 401k or something and save for your future self. And just do yourself a favor.
I love it. Kaaren, always a pleasure catching up with you.
Yeah.
Appreciate you coming back on the show. And guys, we'll put all the information in the show notes, links to the Karen's newer book that she released, as well
Mhm.
as her website. And you can go there, like she had mentioned, lots of good resources there to learn a little bit more about this topic here. So with that, Kaaren, I appreciate you coming on.
Thanks, Kevin. Really appreciate it.
All right, guys, that's all we have for this week's show. So until we meet again next week, this is your host, Kevin Bupp, wishing you huge success. Take care now.